Welcome to the Value Investor TV podcast. This is the podcast that helps you grow your wealth and become financially independent. My name is Beko and my partner, Hari.
Hello.
Happy 2020. Sorry for getting out to you guys late in the year. I know this is already mid-February, but thank you guys all for tuning in. We had some technical issues earlier in the year. We tried to upload a few videos and then we just couldn't quite get there. But I'm really glad we're here now, mid-February, kind of halfway into Q1. We're going to talk about a few pertinent topics in this episode and next. I'm really happy that you guys are with us today. All right, before we start, can you give us a quick disclaimer, Hari?
Yeah, this is the Value Investor TV podcast. We are a podcast that educates you on the concepts behind value investing. We are not financial advisors. We don't know your specific financial situation. So if you are needing financial advice or tax advice, please consult with the appropriate advisor.
Awesome. All right. Great. Let's talk about in this episode Tesla shares. I think it's been on the news for, obviously for obvious reasons. The Tesla is, I read some headlines talking about how Tesla is equivalent in terms of its buzz and everything like that to that of Bitcoin and cryptocurrency craze that was sweeping the world in 2018, late 2018. It's an interesting topic. I think, as a value investor, you always have to watch out for these hyped companies. But I know you have a particular take on Tesla. Maybe you want to share some opinions about that, Hari.
Yeah. So, excuse me. So let's just I don't know how many people are not aware of what Tesla is as a company, but they are headed by the CEO Elon Musk, who got his start in the tech world amongst a lot of other things with PayPal, and he started Tesla in 2008 with the intent of making the world's first fully electric car, and so there's been a lot of promotional aspects to the way Elon Musk does a lot of things. Right? He is, the company has no marketing budget. They essentially just use Elon Musk's Twitter feed, Elon Musk as a person, and so on to promote it. While running Tesla, I think he does it 3 days a week. He also runs SpaceX, and then he has other ventures, the Boring Company, which makes tunnels and things like that. And to give you an idea of why we're talking about this now, if you looked at Tesla in around August of 2019, they were trading at $200 a share. As of this recording, they are around $750 to $800 a share. So they have skyrocketed in the last 5 months, essentially, to proportions that are fairly crazy, right? When you think about this company that has not been consistently profitable for much of its existence, has had a lot of problems meeting delivery timelines and so forth. So what we're really not talking about here is Tesla as a company, Tesla as if we did a deep, in-depth analysis of it, maybe we'll do that at a future date if folks are interested. But really what we're talking about here more is about the concepts behind speculative investments, or speculation, rather. I shouldn't even use the word investment. So I don't know that there are many people out there who would have said in September or August of 2019 that at $200 a share, I would expect Tesla to be up, quadruple in the next 4 to 6 months. Right? Very few people would actually be able to say that with certainty. And it's very rare that stocks would skyrocket like this, right? But what a lot of people try to do is time the market. They try to find stocks that are about to bounce, and then they go rush headlong into it. And so I think that the real kind of discussion that we're trying to have here with you today is, you may think that you will be able to time the market. You may think that you're smarter than everybody else, right? But there are large forces that are acting behind this run-up, and those same forces may turn on a dime and short the same stock, to basically double their profit, right? So, I think it's a very interesting thing to look at, but it's something that I would never want to put my money on either side of this, on the buy side or the sell side. So,
Yeah. Go ahead, Ari.
Well, so the other thing that I found interesting is during the last conference call, people asked Elon Musk. So the company has quite a lot of debt, and they are still not consistently profitable, and are burning a lot of cash. Elon Musk was asked if he's going to need to raise more money. He said no. He said he doesn't think that it would be a good time to do so. And then subsequently, he announced a $2 billion stock offering, after which the company price increased. So, I mean, we're looking at some sort of irrational exuberance around this company, which now is valued at greater than the market cap of Ford and GM, which make about 10 times the number of cars that Tesla does.
Yeah.
It is mind-boggling to me that this company is valued at this pace. So,
yeah, I mean, I think I think the underlying kind of assumption about these kind of high, nosebleed valuation is that the earnings will catch up to its valuation in the future, right? That's the basic assumption for all these like high value companies, and I think the idea is that. Just speaking from the other side, is that Elon Musk, through its magic, would be able to productionize, Model S, Model 3, etc., his lineup, Tesla lineups, and be able to bring forward production to its promised capacity, quite soon, and thus be able to really live up to the expectation in terms of earnings, and therefore the valuation wouldn't seem so ridiculous. So that's, I guess, that's fundamentally what people are thinking about, and that right there is, to some degree you have to look out in the future for every investors, but it's you cross the line into a speculative investing, in speculative trading, if you will, as you pointed out. Another thing that you pointed out, Hari, about the stock offering, if we just take a step back from Tesla as an entity, in terms of stock offering, I thought it was kind of honestly, obviously the idea that CEO would come out a couple days, maybe a couple weeks before the stock offering, and then says we don't need to raise any more money, and then quickly turn around and actually do a giant $2 billion stock offering is a problem. But if we step back and think about what they're doing in terms of, kind of capitalizing on the nosebleed valuation, I think it's timely from that perspective. You're able to raise money with high valuation,
right?
So it's a cheap money from that perspective.
Yeah.
What do you think?
I mean, obviously, as an investor, you never want to be diluted. But if you're going to have a stock offering, you want to do it when the company has a nosebleed valuation. Obviously, then you get diluted less, right? So for those of you who don't understand how the stock offering works, the company announces that they want to sell a fixed amount of fixed dollar amount of stock. So they want to raise $2 billion in stock. So if the stock is trading at $100, versus $1,000, that affects how many shares have to be issued, right? So at $1,000, fewer shares have to be issued to get to the $2 billion number than if they were at $100, right? So, in this case, by a factor of 10. So it's an important metric to really kind of look at is, yes, at a high valuation, obviously you want to do it. If the company is undervalued, you would want to take on debt or do something, or do the opposite, which is buy back the shares, right? So, from that standpoint, I don't have any fault with it. My problem with it is, as a CEO, he has flip-flopped on a lot of issues. There doesn't seem to be a lot of consistency in how things are getting announced. And frankly, I feel like the company is operating at a very, razor's edge at this point, that any small setback, like if, like what we'll be talking about in the second episode with the coronavirus, could potentially, wipe out a huge, amount of this market cap, right? I think the likelihood of Tesla going completely under, as there's a fairly large following of people on Twitter who listen to TSLA Q, which is the for those of you who don't know, when you add a Q to the end of a company, that is the bankruptcy ticker symbol. So you just take the normal ticker symbol, add a Q, and that tells you that it's in the bankruptcy court. And then when they emerge from bankruptcy, they can remove the Q letter designation. So there are a lot of people who are thinking that Tesla will go under. And, one of the things that I found interesting about why they think that, and this should, raise alarm bells for everybody, is that their auditor, PricewaterhouseCoopers, has raised critical audit matters following the review of the company's financial statements. I'm reading this from a Wall Street Journal article. Tesla disclosed in its regulatory filing that PwC, which has examined Tesla's books since 2005, have highlighted auditing the carmaker had particular complexities, including how the company was reserving money for potential future warranty expenses, and the promise it made to guarantee a resale value or buyback option for some of the vehicles it sold. So in essence, they are reserving items on their balance sheet and may not have the appropriate financial liquid financial reserves to actually meet those demands. So these kind of liabilities are are real and can cause real problems for a company. And the fact of the matter is, if you watch Tesla over the last year, and I don't watch them very closely because I don't have any interest in either side of the argument really, there's a lot of turnover at the management level, largely because either they don't like Elon Musk's style or they're concerned about these financial auditing practices. So I would be very concerned as an investor, as somebody who's trying to hold this stock long term, that something terrible happens or there's a recession and it just wipes out 80% of the market value of this company.
Yeah, exactly. I mean, all those concerns that you raise about the integrity of auditing practice, the faith in the company from the high ranks of the company, the lack of rather. I mean, those are really serious red flags that every investor should be aware of. And I think we have to kind of go back to our original topic that you wanted to discuss, which is speculative investing. This is not just a Tesla matter, but this is more of a broader question of how do you deal with an environment where there is a lot of news around hype and a lot of news around speculative investing. As a value investor, how do you keep how do you keep cool-headed? How do you stay disciplined? How do you how do you adhere to the principles that worked that works through the thick and thin? Maybe you can provide some color about that, Hari. Like, how do you personally yourself stay maybe at arm's length with kind of the news vortex, if you will?
Yeah, I think as value investors, we have to deal with absolutes, right? In a world where a lot of people look at investing as kind of a casino, where they are expecting returns based on a feeling or some economic, the broader economic context, or they're just following the hot stock. Those kind of investments are not successful long term, because what happens is you may ride this wave, grow your portfolio, and then get wiped out by a recession or things like that. The danger with speculation, and a lot of people don't seem to really pay attention to this, even though this is a repeated event every time there's a recession, is we are now 12 years into a bull market, or 11 years, I guess, if you can count the beginning in 2009. And there are a lot of people who have entered investing who've never seen a bear market, right? And they've never seen a significant recession. And so what we see is a level of exuberance that you don't normally see under normal situations, that interest rates are extremely low. There's sky-high valuations for businesses. Companies that would normally have, that are low growth, not going anywhere, businesses that are trading for, PE ratios of 30 and higher. And so you see companies like this where people are piling in because they're trying to, extract every ounce of of money that they can.
Return.
Of return. Thank you. That they can, and they are doing things like using calls and other options to kind of manipulate the market as much as they can. And the reality is that as a value investor, what we want to do is we let the market set the price, and then we make a determination as to whether or not we want to play, right? And a company like this, I have zero insight into. I have no idea what is going to happen. And, I think there are plenty of famous value investors who've tried to short Tesla because they don't see this as a valuable stock. And they've all been burnt.
Or rather, its nosebleed valuation is too nosebleed.
Correct.
From their perspective.
Yeah, it's way overvalued from their, and I would agree with them on that assessment, right? I think it's overvalued, but there's a big difference between saying that something is overvalued and actually putting money down, as a bet against it. And what I would say is, in a lot of ways, shorting is speculation too, right? Because you are expecting the stock price to go down, but you don't necessarily know when that will happen, right? And a lot of people who have been shorting Tesla when it was in the 200s, it's now in the 800s, right? And there is an unlimited loss that you can sustain with a short stock, with the short investment, or with speculating on the short side, and a limited upside, right? You can only gain 100% of your investment, but you can lose as much, as possible.
Another thing that maybe you want to add a little bit more color to that is when you do short a stock, there is a price you have to pay for every share that you hold.
Right.
Because unlike a long position where you hold the equity and there's no, you don't have to actually do much to hold it. There's nothing you have to do. You just have to hold the stock. If you short the position, maybe you can add a little more color to that and why it's expensive.
Right. So when you short, you're actually borrowing shares from somebody who is a long position. You take their shares, you borrow it, and then you sell it on the market, and then you are required to pay them back. And during that time that you hold the stock, you have to pay interest on that, and that interest can be as low as 1%, or it can be high for heavily shorted stocks. It can be a very high amount, right?
Yeah.
And the crazy thing that we're seeing with Tesla right now is the call option volume is like $800 billion. It is like 4 to 5 times the market cap of the entire company is being transacted right now. So if you see that, unless you have $800 billion, you are not going to win that game, right? You cannot control what is going to happen, and at any time, the tide can turn and you have no control over it, right? And so what I see that, this is true of Bitcoin, this is true of any speculative thing, is that you are basically at the mercy of the price, right? If you're a long-term value investor, you hold the stock and you're basically doing time arbitrage, right? That eventually the value of the stock will be reflected in the price, right? And that's why you buy it for nothing. So you buy it with a significant margin of safety, and you hold until the arbitrage comes true, right? And I think that's the ultimate problem here, is that I don't know when Tesla will be ultimately valued at its correct valuation, but I'm not willing to wait, because I'm going to have to pay interest on that. And
exactly.
And even if it drops by 50%, that may not be enough to cover the interest payments that I've accrued. So,
yeah, I mean, the whole short positioning how to play short. There's a whole host of people who play in that market in Wall Street, and people in real retail also play in that market, and there's respective strategy in that sphere. But from our perspective, Hari's perspective, and my perspective, we don't really play at the short positions because of the cost and the kind of speculative nature of shorts. So I think that kind of nicely summarizes, I think, the kind of topics that we wanted to cover in this episode. We talked about how Tesla, is as a nosebleed valuation. A lot of people are playing in this space because they want to get the last squeeze out of this bull market. A lot of speculation, a lot of news around Tesla, and of course, all the kind of the negative, kind of the dark side of it all, and the kind of red flags that we see as value investors. And also just outside of Tesla, just being able to be very disciplined and regimented with our approach in value investing is kind of the takeaway message in this episode. All right. Anything else you want to add here before we move on to the next episode?
No, just we now that we're getting back into the swing of things, if you are interested in reaching out to us, you can get a hold of us at info@valueinvestor.org. Send us an email, ask any questions that you have. If you want to join our Slack community, you can also send us that email and we can add you on. We have people asking questions, almost every day and we're here to help answer those questions and build an online community. So we very much welcome people asking us those questions, getting involved, helping each other out, and then ultimately sharing news and other things, and helping you find your next investment. So please get a hold of us, and we're happy to add you on.
Great. And again, as I mentioned earlier in the episode, since deep apologies for not being so active for the past 3 months. We're back on track again, and we'll be producing content. Hopefully you guys can stay tuned and follow us. All right, thanks so much, guys. I'll see you guys in the next episode.